Ladies and gentlemen, welcome to the Tokenomics Conference of the Malta Blockchain Summit 2018, sponsored by WH Partners. The European Union and DLT. Roberta Metsola from the European People's Party provides an overview of the EU's efforts in DLT. Roberta Metsola, Member of the European Parliament.
Welcome to Malta. Thank you for having me here today. It is truly an honor to be able to address this event in the presence of so many pioneers, investors, technological gurus, lawyers, robots, and fellow geeks like me. I'm excited by blockchain, by distributed ledger technology, and by the enormous mammoth potential that the technology has to offer. It is hard not to be excited. I am a politician. I got into politics because the status quo was never good enough, because I believe that politics is still one of the leading forces of change in this world. And thanks to this technology, change is happening at a pace faster than at any other point in world history. Now, it is true, however, that no matter how exciting, change has never and will never be easy. Drastic shifts in the often misunderstood technological and financial worlds naturally raise all sorts of opposition and concerns. I imagine when coin was first replaced, barter people were worried, as of course they were concerned when credit cards became the order of the day. And I am, yes, old enough to remember the fear, genuine fear, of so many people when online banking or even PayPal became the normal way to manage one's finances. All these instances faced a moment of truth, a moment of clarity, so to speak. People's habits shifted, abuse was tackled, and targeted legislation came into force, providing parameters that allowed for innovation to flourish, the technology to continue to grow, and gave people confidence. Now, blockchain is the revolutionary element in the current digital transformation of the global economy that we are experiencing. Its potential is enormous, with uses in finance, healthcare, banking, research, entertainment, poised to transform established industries and change how business is conducted practically across the board. But change does not wait for politicians to catch up. Technology has been at the forefront of societal change for generations, and here we are again now. So for me, as a European legislator, the principle underlying blockchain, fintech, DLT, cryptocurrencies, and AI is how do we harness all their potential while strengthening safeguards and allaying people's fears. These are more than just buzzwords. We are changing the landscape complexly and totally, but more needs to be done to convince, understand, and educate a naturally skeptical public. Some critics deride DLT as basically Excel on steroids. They point to the fluctuations in cryptocurrency values in recent years as a sign that this is a fad, a craze that will soon die down. And we would be wrong to ignore or dismiss these voices out of hand. We must engage and do more to show people that DLT is essentially about increasing trust, that decentralization actually provides more security, more peace of mind, and frankly, cutting out the middleman, more cost efficiency. It is no longer a system of the far-off future, it is now. And here let me emphasize how much reputation matters. And this is particularly true for cryptocurrencies. We need to ensure that money laundering concerns are addressed and that this new, misunderstood system does not create new dark nets of anonymity to allow new places for criminals to hide ill-gotten wealth. Now, law enforcement concerns are well documented, and these must be addressed if crypto is to truly take off and reach its potential. Reputation matters to companies, to bona fide investors, and to companies' bottom line. It is too important for a few rogue operators, or a few rogue politicians for that matter, to endanger. Industry must also demand accountability in this regard. In a time where ideology in politics has often taken a back seat to pragmatism, I still always underline that I am not a big believer in big government. Sometimes it's better for us to take a back seat and allow emerging technologies the space they need to develop. Now, that is not to say that regulation is the wrong approach, not at all. But we need to have the right type of regulation, targeted, specific legislation, and we must have it at the right time. Too soon, and we risk jumping the gun. Too late, and we risk being totally left behind. Now, in my few years representing the people of Malta and Gozo in the European Parliament, I have become wary, very wary, of sometimes overzealous and even unnecessary regulation that serves to stifle innovative concepts. For blockchain, artificial intelligence, and so much more, we need to make sure that we do not go down the road of regulation for regulation's sake. Because, as always, the maxim that a good headline does not always mean a good law remains true. And within the European Parliament, we are, of course, discussing blockchain and cryptocurrencies, and I have been involved in a report that will hopefully go on to feed into the European Union's general policy on blockchain and DLT going forward. Now, we want to move from vision to reality, and to do that, we must ensure that any European regulatory and institutional ecosystem that exists is sufficiently flexible to be able to embrace these new models while ensuring that this is balanced with all the necessary safeguards to prevent abuse of the system, allow innovation all the space it needs, and continue to build confidence in the process. This is how we generate new jobs and create new economic spheres of activity that will benefit everyone. We all know in this room what is at stake, but now we have to communicate it out there in order to make sure that we get this right. Now, as an archipelago in the middle of a vast sea, Malta and Gozo have always had to put innovation at the forefront of our economic policy. We have harnessed emerging technologies to create new spheres of economic growth. We got it right with maritime, gaming, and of course, financial services. We grew because we realized the potential of these sectors and what they had to offer, and we used our size to our advantage in order to move quickly and expertly. Now, I want us to again be ready to understand and reap all the benefits that DLT and blockchain have to offer. The new legislation passed by the Maltese Parliament in summer is a good step forward, as it is the setting up of a new Malta Digital Innovation Authority, tasked with overseeing businesses in this sector. But we have to remain adaptable, and we have to remain on our toes. We will do what we can do to ensure that Malta and the EU as a whole has the basis to attract the right type of investment and be at the very top of global technological innovation. We have to continue to diversify, to breathe new life into our economies, and to facilitate the creation of new ones. Now, Malta and Gozo may well be the blockchain islands, but my vision is one of Malta being the tech destination of choice for the future. We have the ideal environment, and we can create an island home for digital innovation, invention, and allow a safe haven for new industries to develop, aided and protected by avant-garde legislation and policy decisions. But to do that, we have to match the fantastic enthusiasm I've seen today with massive public investment in both traditional and technological infrastructure, while maintaining the right regulatory ambition that we need for the sector to grow. And this can be done. And in a country that is traditionally so divided, almost too divided on partisan lines, you will not find big political differences on this, because this process can bring the spectrum closer together. To conclude, and to use a saying that will soon likely be removed from our lexicon, it is time to put our money where our mouth is. Now let's make Malta, Gozo, and Europe an example for others to emulate. Thank you.
The importance and challenges of token economics. Sebastian Markowski, GP Bullhound. Godwin Schembri, Know Me Now. Wei Zhu, Binance. Sarah Olson, Gemini.com. Moderated by Olga Finkel, WH Partners.
Good afternoon, ladies and gentlemen, and a very warm welcome to you from myself, co-managing partner of WH Partners, and from my firm. Welcome to the Tokenomics and Cryptos Conference. Today, to start off, we're going to discuss the importance of tokenomics. And that can be loosely defined as a design and an implementation of the token, because obviously the token is at the core of tokenomics. If you get it right, you hope, all other things being equal, the token will fly. The use will increase, the value will go up, and everybody will be happy. Of course, it's a success. Otherwise, it is possible that it will never take off the drawing board. And of course, it will be a disaster for the issuer of the token and also for the token holders. These are the issues that we're going to discuss today. What are the elements? What are the components of a good design of a token to ensure that it is a success? And today we have a very interesting lineup of knowledgeable speakers at this panel. I will introduce them as we go along and as they jump into the discussion. Ladies first, I'll start from Sarah Olson. She is the head of business development of Gemini Trust Company. Gemini is based in USA, and it is digital asset exchange and custodian company. On the website, the mission statement that you have is to be the bridge to the future of money. And as I understand, you are also the issuer of a rather unusual animal these days, a stablecoin, Gemini dollar. Can you please share with us the thinking behind the introducing and issuing the stablecoin? And what is the main function you want to achieve with this token?
Sure. Does anyone in here watch Game of Thrones? Like, come on, we have to have more nerds than this. Come on, like, she's man's. Well, for those of you who don't watch the show, there's and it's really apt because a lot of it was filmed here and then in Croatia. But there's this city called Karth, which is supposed to be the richest city in the entire world, the richest city that ever was or ever will be. And the whole, all of the economic activity of the city is essentially collateralized by, all of their treasures, which are housed in a vault. And of course, and I'm sorry for spoiling this, but it gets revealed, at the end of one season that when you open the vault, there's actually nothing in there. And so all of this economic activity that's supposed to be backed by legitimate value has been predicated on basically nothing. And so the concept of a stable coin, when we issued it, wasn't new, right? This isn't necessarily revolutionary technology as it relates to ERC-20 protocol. But what is different about what we're doing is that we're trying to create legitimacy and transparency to create a true digitized dollar on the blockchain. And this is really important for our business because, as you mentioned, our mission statement is really connecting the mainland of traditional finance to the island of cryptocurrency. And so what we've done is we've created a stable coin
Can you kill that? No, can you kill that? Thank you. That's really annoying.
What we've done is we've created a stable coin where we're giving full transparency and we're partnering with the top institutions to create a true value of the dollar on the blockchain. All of the dollars are held at State Street. We're a trust company. Our stable coin is regulated by our prudential regulator, the Department of Financial Services. And although that a dollar on a blockchain isn't necessarily as cool or interesting as a lot of the things that you're going to hear during this conference, what it enables a lot of these protocols and applications to be able to do and to connect with other institutions is incredibly profound.
Right, thank you. Godwin, you are a co-founder and CTO of the project called Know Me Now. which is, according to your website, is a KYC solution that will revolutionize the process of collecting KYC, and your ambition is to solve the problem and the headache, both of those who are obliged to collect the KYC information, and also for those who are obliged to provide it. My understanding that you are planning to issue not only one, but actually two different tokens, two different types of tokens. Please share with us your ideas. Why two? Are they the same? How they link to each other? What is the thinking behind it?
Yes, when we set up in funding this idea, ICOs were at the top, and the problem with startups is funding, especially when you come from a small island such as Malta. They speak about a lot of volatility, about a lot of liquidity, which is true for a small island, but then again, it's all coming from traditional investment, and therefore we try to attract them. And when we speak a bit about tokens, they all tell us, you speak about the product a lot. They tell us they love it, but we don't understand blockchain, we don't understand tokens, so I'm out, like on Shark Tank. So we then started to talk about equity tokens. We redesigned, very early on, I believe in April, we designed our security token to be a share of profits of adjusted gross revenue, effectively, so like dividends. So it was an early idea of security token. Again, we had lots of interest of it, but they wanted to sign up to some degree. We did a tour, and they said, come speak to me the moment there are exchanges that this can be traded. Because at the end of the day, this is an investment, and what we want is liquidity. So we ended up deciding, okay, forget it. After all, the world, we might be too early to some degree. We missed the boat, potentially, is the truth as well. We all know about ICOs. Now STOs are coming, and because the exchanges are coming, but still, that will trade the security tokens, but still, it's going to take a bit of a while, in terms of the licensing and everything, but we're all waiting for that, and we're going to see a lot of security tokens.
Right. Let's move on to Sebastian. Sebastian Markowski is the director of GP Bullhound, as the leading technology advisory and capital provider firm, a VC. And it's been at it for almost 20 years, my understanding is. Your motto is helping exceptional people building exceptional businesses, including tech unicorn. So how do you go about building the unicorn and assisting your clients, those who come to you with pitch decks, and you go through them in your deal flow evaluation? What are the functions, what are the areas, components, elements, features that you look into of a token design? What is a good token design that you look for, and what you just discard straight away?
So yeah, I think one thing that, we have good relationships with some of the leading technology entrepreneurs, particularly across Europe, since that's our focus market, and we help them raising global capital for 20 years. And in this network, we have a lot of exceptional entrepreneurs and people that have a proven ability of execute business models. Yeah, it's not only about the idea, it's very diligent and pure execution, which is a lot of work. So there, I think we try to bridge a little bit between both worlds. You have the very blockchain end where things are far away yet, technology-wise, from something that can be enterprise grade. And then you have blockchainified business models and everything in between. So we try to go with the reputation and track record of an entrepreneur and try to take more ownership in creating ideas that really make value and that address a massive market. And there, I think it's important, so what's been said already by Goodwin or by Sarah is something that we think about a lot in designing those projects, because you usually need, or we see more and more multi-token models, because having governance and ownership and utility all in one token is going to be creating problems for most of the projects that we see, and only a few will be able to live with that longer. Right. So there needs to be clear differentiation. In the end, it's then about that the token gets used. Yeah, we have discussed yesterday at the dinner a lot about what's the real use case. And the real use case is probably store of value. And then it's eventually staking to get the incentives right on the platform in order to achieve the best possible output. But other than that, everything else is a little bit, in the broader sense, probably payments. Yeah, and not really utility. And that's something that you have to think about really, really carefully in getting the project and the token economics right.
Right. The last but definitely not least on our panel is Wei Zhu, who is a very experienced CFO of Binance. Binance, of course, doesn't need an introduction at all. It's the largest exchange by volume on this planet and probably in the universe. So everybody seems to be wanting to be listed on Binance, and there is even such a term as Binance effect. Wait, is it true that there is Binance effect? What kind of effect does the token get when they actually get listed on your exchange, provided they can afford it, of course?
Yeah, I think I'll talk about two things. One is about something that I think most projects and a lot of people in this room may care about, which is basically listing on Binance. I think the Binance effect is something that has came about, I think that, the last year or so, but then our exchange is only about a year and 4 months old. So I think the sort of the major effect is basically you get what's perceived as basically, a premium within the market. For example, our sort of acceptance rate in terms of application for listing versus listing is less than 3% right now. So, but the thing is that what's really behind it is actually the liquidity that the token gets once it becomes listed on Binance. And I think that's something that a lot of projects look for. And I think outside of sort of the listing process for Binance itself, the second point that I want to make is actually I want to talk a little bit about tokenomics, is basically the token economics behind our own token, which is the BNB token. When we did our ICO about a year and 4 months ago, we basically set out 200 million BNB tokens. And, but one of the things that we set out was that we're going to burn 20% of our token, 20% of our net profit every quarter until that total supply gets taken down to about 100 million tokens. That's in our white paper. And we basically have been exercising that for 5 straight quarters. Our burn for the last quarter was about $17 million. It's down a little bit from about $32 million the previous quarter, but it's something that we've set out in our white paper that we would do, and we've continued been doing that since day one.
I have one last question. We're running out of time. How do you see the interplay between different features of a token? Sometimes there can be a conflict between different features. For example, if I am as an investor, as a token holder, would want to wait until the value goes up, then I will not probably be able to use it, would not want to do it. On the other hand, we heard today that the more token is used, the higher the value. So how would you resolve this potential conflict within the design of the token? Please jump in.
Yeah, so I think, I mean, one important element, what you say is absolutely true. So that's, again, I come back to this multi-token model. So I think there should be, as you have mostly a payment element to it, and then on the other side you have the shareholdership and governance that you want to interlink them so you maximize usage. So whoever contributes value to a platform should at some point probably be also able to buy in more on the equity token side. And I think in the end, you see it very clearly with a stable coin where you don't have capital gains by definition, but you need to keep the network alive. You need to make money, and that's the things people should think about. It's not a business that's based on token price increase is not going to be sustainable.
Right, Godwin.
I would say I would add another aspect to that, because at the end of the day, there's this important ethos of decentralization. And so people then talk about solving this problem by, I don't know, buying coins back, and of course, if you are selling a service, utility, you need it to be used, but people are holding on to it. But then the owner of the company says, I'm going to sell a bit more or buy a bit more. But then it becomes again centralized. So I haven't yet seen a model that solves the utility more, because the utility is being seen, I think the biggest problem is utility is being seen as an investment token, when in reality it is cash, monetary value.
How do you see the effect of regulatory environment of the token, and how does it contribute, or otherwise, to the success of your token? Sarah?
Wow, it's really interesting that Wei and I are sitting next to each other then, because we work for very different exchanges that I think are both bringing a lot to the ecosystem, but have very different regulatory frameworks. I think, I think from Gemini, we have the ability to bring really sound regulated products such as the Gemini dollar, which are really, really valuable in terms of the institutional adoption of cryptocurrency and creating stability within these projects. You can use, paying a dividend in a Gemini dollar for a token, for example. I think what's really incredible about Binance is, what they've been able to do in terms of their scope and expanding and their reach and being able to offer, so much to their clients in terms of the menu, and that really, really helps innovation. Regulation it's a really tricky concept. Regulation is really core to our business, but it again, we can't list everything under the sun.
Okay, your view?
We welcome progressive regulation like we see here in Malta. Which is one of the reasons that we're spending a lot of resources to develop our presence here. In terms of what we look for in terms of regulatory is actually just clarity. I think that's one of the most important things to this industry right now. If you can get clarity, and like for example, one of the biggest news I think in the industry is actually Hong Kong is going to come out with a sandbox approach to regulating cryptocurrency. And I think that's, for a major financial market, that's very, very interesting. For us, we've had investment from one of the sovereign wealth funds in Singapore, Vertex, and our entity in Southeast Asia. And that's something that we've seen as sort of another advancement in terms of, in a regulatory framework. I think in the United States, it's going to get better. So, and we look forward to working with Sarah.
Thank you. Thank you so much to our panelists for an interesting discussion. And I hope the other panelists in this conference will be just as interesting. Thank you very much.
Institutions, brokers, and communities. The future of crypto trading. Marco Motana, CFX Advanced. Jane Zavalishina, Cryptology. Jaewoo Seo, Cryptonity. Juan Lee, Nextchange. Moderated by Miko Matsumura, Evercoin.
Okay, thank you very much. So we're down to 15 minutes already, so I'm going to be really time efficient. So we just had these wonderful introductions, so we don't need to further introduce ourselves. What I did want to say is let's get straight into it. So I think the first point I'd like to make is this is really about institutions, brokers, and communities. So when we think about institution, everyone's looking for the Netscape moment, right? So the mindset is consumers. When will consumers adopt? But my idea is that institutions are first and foremost. So we're really going to see institutional adoption, which is going to drive a huge value in the crypto economy. So I guess what I'd love to do is really do something very time efficient, which is I would do a point counterpoint. So what I'd like to do is just assert that institutions will lead the next wave of cryptocurrency adoption. Anyone want to fight me?
No.
Disagree?
Absolutely.
Okay, agreements are not useful, so let's continue to fight. I'd like to fight further. I'd like to say that, that there's no such thing as a security token. So anyone want to fight? Go ahead.
Security token is the future.
Okay, your mic isn't picking up.
Oops. Security tokens are the future, in my opinion.
Okay, so here's the fight. The fight is this, is I have in my pocket a white rock. If I go to any jurisdiction and I say this is a white rock, whiteness is a property of this rock, right? If I go to any jurisdiction and say this token is a security, I'm going to get different answers depending on the jurisdiction. So security tokens aren't a thing. Fight or no fight?
Security tokens means something that you can understand better, and you can have the government with you when you walk forward in the market. And being a security, as we decided to be, for example, in CFX, means to comply with rules, even rules that are not still written sometimes. And
but I guess what I'm saying is that security is not a property of a token, and I think the juxtaposition of security token and utility token is completely dysfunctional and broken, and I'm super happy to have this concept of VFA, virtual financial asset, because that's actually a schema that is rational. Security versus utility is irrational and broken. Anyone want to fight? Just a comment.
It doesn't
Go
matter
ahead.
how rational it is. You know, I once read a book on accounting which had a quote, but you shouldn't confuse the economic sense of things with so-called common sense, right? These are two completely different things. So, security token maybe doesn't exist, but as regulation comes, it will, right? And actually, this also, your point that there is no such thing contradicts your previous point. I mean, how do you see institutions coming into the space and actually starting investing?
Yeah, this is
not
a great
ICOs,
fight.
right? So you're contradicting
This
yourself.
is a great fight. This is a great fight. The thing that I'm saying is I'm saying that indeed security is actually in the eye of the regulator. So the
Exactly.
regulator decides what's a security. What I'm actually opposing is the idea that if you have utility, then you cannot be viewed as a security. That is an absolute rubbish perspective, so I want to make sure people don't misunderstand. The reason why I'm ranting about this is because I feel like the industry goes from ditch to ditch. And I think the ditch, they said, we're in the ICO ditch. ICOs are broken, let's correct.
break something
Let's
else.
correct. And so now we're driving into the STO ditch because we are in danger in the ICO ditch. Go ahead.
But for me, I feel like we are sometimes opposing ICO and STO, for example.
Yes.
Which is completely a nonsense from my point of view.
Thank
because
you. Keep going.
I feel like STO, from the user's perspective, it's the guarantees that they were not having in the ICO. And we are trying to find a way of guaranteeing them some kind of value and uses that they can do. But for me, initial coin offering, in its literal sense, it's a project that raises coins for its funding. And I feel like because we've been through a lot of, it was the Far West. Everyone was, trying to do its own thing. And now we have a more mature market and users who are willing to have guarantees and some kind of value associated to the token. And I feel like that's why the hype to the upcoming STO is so high, in my opinion.
I agree.
But they are not really contradictory. It's more like a natural selection and evolution from
I want to
my
bounce
point
it
of
to
view.
Juan, because I think there's a false dichotomy here, and I think you're onto that.
First of all, I don't think you can have a security token unless you actually had a utility token captivate the minds of the people, right? So really, the ability to not have this kind of Wall Street way or venture capital way of raising money is the reason why we even have this conversation, because the utility token captivated the mind, setting the stage for a security token potential. Having said that, I would also say that adoption happens when people understand. When you look at a utility token, most institutions do not understand, number one, how to value it, how to use it. Entrepreneurs themselves, they talk about it in a white paper, but they have no idea how to execute utility in their system. They can actually run some of these companies that have been floated on an ICO, but they don't know how to make a utility or a token circulate in their system. So what we see is a broken system now, because utility doesn't really work because it's held in the hands of the people that don't know how to make it to work.
I'm totally with you, and I think the thing...
I completely disagree.
Yeah,
if you'd like to fight.
And here's the thing. Oh, please, do you want to fight?
Yeah, I don't think the problem is that people don't understand it. I think the problem is that the utility tokens, well, in its normal sense, are not investments, right? It's just souvenirs. They are irrelevant for the institutions.
Well,
and that's
I think,
why it has nothing to do with security
But I
tokens.
think what's broken at this juncture that's fascinating is that the utility tokens generally are not producing any utility.
Yeah.
And therefore, they're
being
unable
misused,
to actually
that's true.
generate
But
any
it doesn't lay
value.
any ground for the security tokens. These are two completely different stories. If
Let me give
utility
you, can I offer you, so I know this is a very important point, because I think what we've been saying may confuse new people in the room, which is, please try to think about it like this, which is there are tokens that are backed by assets. Those are things, right, that you can buy and sell. Those are assets. There are tokens that are backed by services. Services are things that you can kind of access and use, right? That's a schema that makes sense, right? So when you talk about utility token, you're generally talking about a token that's backed by a service, right? So to me, the reason why I assert that security versus utility is rubbish is that in the United States where I live, the SEC thinks that every token is a security. Therefore, you can't say utility token, security token. They're all security tokens in the United States. But if you come to another country, so my point is we can't have a good conversation because each of us is from a country where those two things mean something completely wrong, horrible, and different. So in my country, security token means all tokens. So it just results in confusion. Juwan's point, perfect. But the last thing I want to say,
let me make
go
a
ahead.
point, Miko,
Go for
which
it, go
is
for
that it doesn't matter what the interpretation is, that not majority of them aren't working. So I think that's the most important part.
Beautiful.
It doesn't matter what you call it when it doesn't work.
Great.
So I think one of the important parts of this is that we now have enough facts. I think what happened with this whole ICO boom is that one thing that people did not understand is valuation. What we've had in the last maybe 1 year is price discovery. People now understand when they raise a certain amount of money and the valuation of whatever they thought was going to be very high, the market determined it was really worth almost nothing.
Yeah,
right?
and let me jump.
So
okay.
that's what it
Go
is.
ahead.
It's none of them, hardly any of them work.
Yeah. And here's the great point. The great point is that if you don't have a mechanic, if you don't have value, then it's super hard to have valuation. And if you don't have valuation, then any token can have any value. And you know who wins that game? The one who wins the game are pump and dump groups. Those are the people that win the game when anything can have any value. When you actually have something like a PE ratio or a price target, then the people who win are the people who are deploying capital. The investors win.
I think one of the things that doesn't help to get the sense of utility of a token is because they are all sometimes project related and not industry related as well, you know. So nowadays I'm listening to some projects, for example, in the field of cacao or in some big industries where they are thinking about tokenizing and creating a currency that can help them, you know, trade and everything.
Okay.
And the thing is, if you're from just a project point of view and you say this has an utility only in my platform, in my products, and in my services, it also has a limitation. That's why.
So I think what you're touching on is both the concept of platform and the context of ecosystem, right? Because when you have platform and ecosystem, particularly occupying a vertical industry, then you actually have the ability to deploy more capital because you can create kind of a bigger flow. So I think that's logical. Anyone want to fight about it?
Well, the problem is that everyone is trying to build their own ecosystem.
That's
so how many ecosystems we are going to have?
That's another beautiful
Millions?
point. And everyone's trying to be a platform.
No, so maybe that's actually not a very ecological way of building your project when you try to get everything into your own ecosystem.
So let me do a counter punch, which is I want to say that centralized exchange is hopelessly broken and nobody should put their coins on centralized exchange. Agree or disagree? Fight?
I disagree. How else you can trade coins on fiat?
Yeah, so that's a very valid point.
Maybe you can mix together the two stuff.
I think that's a valid point. So here's the idea. The idea is everyone with crypto should hold their key, and when they want fiat, they can do the exchange, but don't leave your coins on an exchange. That custody is broken. Let's put it that way.
That should be a hybrid model.
Excellent.
Well, I think you can only have something that's broken that was working, right? So
that's great.
Okay, so I think what we need to have is
it never worked in the first place.
So the trust was never there,
Yes.
If you almost talk to every exchange, they won't tell you publicly, but they have all been hacked, right? So,
Of course,
from
all
our,
exchanges
yeah,
are being
so
hacked.
where you can only fix something that has been, well, it was never working in the beginning.
Yeah.
So there had to been an evolution of 1.2, 1.3, whatever version there is. If that eventually becomes a hybrid, that is one of the solutions. But unfortunately, I don't think we're going to have one solution. We're going to have many solutions.
We'll have many
Is
solutions.
it unfortunate?
So,
It's
so
the
we-
same.
with-
The market shapes itself.
So with,
At the
2
end.
minutes and 30 seconds left, I just wanted to crack open the concept of community. So I'm just going to assert that in the future, incentivization and community will become more important than user base or any kind of a basic valuation model. And I think it hinges on trust. So anybody want to kind of poke, fight, add? Closing comment?
I agree.
No, the notion of community as well has to be defined, I think. From
Okay.
my perspective of community is I feel like we should give more power and involvement to the community into helping exchanges like ours to evolve, to build features that actually fit their needs.
Sure,
And,
sure. of
that
course.
communication channel.
Anyone
Yeah.
else? Anyone else want to close?
We are all
couple
doing that,
seconds?
so yeah, we are going
Yeah.
to a community.
Another stuff is teaching people how to use the systems because there is very low competencies around.
Absolutely. Absolutely. Education. John?
Community is not static, it's always evolving. And what makes a community engage now may not be what makes them engage in the future. So it always has to be changing and evolving. As much as we've seen so far, the only thing that's constant that I've seen in ICO and blockchain world is constant evolution and change.
That's
and
actually a great point. I want to corroborate that.
ahead.
We may end up, right now, all our efforts are to community, but we may actually end up with bringing more retail investors with not really having a community. I mean, when you think about, let's say, bank customers, are they a community? Like IBM AMRO customers? They're not.
Yeah,
Right?
that's
So
a beautiful
we
point,
may
right?
eventually develop as a blockchain community into just being, well,
If you
consumers, investors, whatever, but not
I
really a
think
community.
we're kind of tying together platform, ecosystem, community, and I think these concepts are interrelated. So I think we are describing a future that I think is of interesting value. So what I really wanted to touch on as kind of a closing point is, the thing that becomes super interesting. Someone asked me, should I do an ICO, right? And I basically said, that is a terrible question because it will only lead you to ruin. You cannot answer that question in an intelligent fashion. The question should be, should I incentivize the people and the organizations that are adding value to my ecosystem? Should I incentivize those people, right? And the thing that's great about a trick question like that is there's only one way to answer that, which is if you say, I will not incentivize those people, you're not going to be a functional business in the future because someone else will. Someone else will come along and incentivize the people that are currently adding value to your ecosystem. So I really feel like that's the bottom line, and that leads to a very good place.
Thank you.
Okay, thank you very much.
Banking on Bitcoin. Can banks evolve and embrace? Germano Arno, e-money. Stefan Hennel. Institutions, brokers and communities, the future of crypto trading. Marco Motana, CFX Advanced. Jane Zavalishina, Cryptology. Jaewoo Seo, Cryptonity. Juan Lee, Nextchange. Moderated by Miko Matsumura. Banking on Bitcoin. Can banks evolve and embrace? Germano Arno, e-money. Stefan Hennel, Payment World. Tim Frost, ekibank.com. Priyanka Lilaramani, plinth.tech. Dimitris Litsikakis, Revolut. Moderated by Joseph Borge, WH Partners.
So, as you can see, it's not exactly what you have seen there. So I'll briefly introduce Leonard Bonello from Ganado Associates. I believe, Leonard, if you can say a couple of words just about your background.
Oh, so I am actually a banking regulatory lawyer who has now moved into payments and moved into crypto. So I'll be wearing two hats and I can play devil's advocate to my own arguments whilst you're here.
And Stefan should be somewhere close, and he will have his intervention at the end of the panel as well, to give us some insights from his side. So we have a very, very short panel, so and a very big one, so we have to rush into this. So traditional players in the financial services industry are threatened by blockchain and cryptocurrencies. Some are fending off this threat by fighting it, others are embracing it. What are your thoughts about this? Maybe the unicorn of the air could give us some insights.
So thank you for your question. I mean, for Revolut, we decided the latter. So we decided to embrace crypto. We offer crypto in Bitcoin, Ethereum, Litecoin, Ripple, and Bitcoin Cash. And it was actually the right move for us. When we introduced exposure to crypto, we saw an exponential growth of our users. That means that a lot of people took notice and used Revolut to buy Bitcoin and the rest of crypto.
Priyanka, you're an ex-Goldman executive and now you're in blockchain head-on, so...
So I think, Joe, we need to frame this discussion. What I'm seeing in the industry is a lot of two polarized opinions. You've got on one side people who are such fanatic believers of what's happening with cryptocurrencies and blockchain that they think it will replace fiat altogether. And then on the other hand, you have the critics who don't want anything to do with it. What I do think will eventually happen is through evolution and through maturity and professionalization of the industry and of the service, the banks and the cryptocurrencies are actually going to coexist and find a symbiotic relationship where your traditional fiat currencies or the traditional banking services will exist hand in hand with cryptocurrencies. And actually, Revolut, as you've rightly said, is leading the way in demonstrating that that can be done.
Leonard?
I'd like to take a bit of a historical analysis to it in the sense that
we don't have time for history, though.
No. But we've probably seen the past 10 years of the highest amount of banking regulation. So banks have all the time been caught up with looking and focusing at catching up with regulation and compliance instead of business generating, instead of new models, instead of looking at new technologies. And now probably when they're going to get a breather from regulation, they're going to have actually catch up with the reality that the unicorns in this world and the cryptocurrencies in this world are now a massive threat for their business operations. And now it's really going to be a question of survival for them. So they either adapt, they either make that leap, or else they're going to become extinct or much less relevant within the wider picture of things.
So as a cryptocurrency entrepreneur and someone who's now working with Ekibank, the first offshore licensed crypto bank, there's a lot of opportunity that's came up because the traditional banks that we've seen, the traditional giants, they've been very slow to adopt, and I don't think anyone's surprised. And banks such as Eki, they've seen opportunity, and they've been able to build infrastructure from the ground up, been able to work with small regulators from offshore jurisdictions and small economies that are wanting to capture this opportunity.
Germano.
I think that we can stop the future. I think that cryptocurrency can be an opportunity. And all actors in this banking panorama, I think that must be embrace this new opportunity.
You're an money institution, so I want to ask you this question. I want to take the opportunity to take this question. So, in the latest version of the regulations published by the MFSA, money institutions, finally, because in the initial version they weren't, they are allowed to hold funds.
and users' funds with exchanges and funds collected from ICOs. Why are e-money institutions able to be more friendly than banks to this industry?
But we think that, I think that e-money institution must be more fast for changing business because we don't have a legacy system, legacy idea. And for us, we like to explore new market. We like to explore new business and new opportunity, as I just told.
What do you think, Dimitris?
I totally agree. We are much faster because we don't have a legacy system, but to build on that, it's also about the culture. So the banks have a different kind of, allow me to say, old school way of thinking, that they are not so fast to change. They don't embrace change as much as fintechs do. And this is a problem, and we see that everywhere, not just in crypto, but in any other technology. You open a banking app, and it feels like in the 90s, so they better do something about it.
But is it all their fault, or are regulators also protecting the traditional financial industry?
I think regulations obviously have a very integral role to play in this. What I would say, though, is the common theme here is we need to do more to educate the people who are in places of decision-making or policy-making. So I think when it comes to regulators, I don't know if some of their decisions are so much to protect the incumbents, but I think a lot of those decisions are driven from lack of full appreciation or lack of a complete understanding of what this technology is or what digital currencies are, and therefore how they can really be harnessed. And I think Roberta earlier made some really meaningful comments in that direction, that regulators do need to keep pace and have the right skill set in their teams, so to be in a position to actually make judgment calls. And at the same time, I think things like the VFA Act, Malta is definitely leading the way. So I'm not so worried about regulators protecting the incumbents. I am more worried about making sure that the key regulators in key jurisdictions are able to actually speed up their thinking and be pragmatic in their thinking.
Leonard, coming from the other side, from the dark side.
I think we've seen a breakdown of the universal banking model. So before you go to one bank and you get everything from there. Nowadays, switching banks means simply switching your thumb and moving from one app to the other. So the model of getting everything from one service provider is over. And you can get your home loan from one entity and your best payments or your best cryptocurrency exchange with a switch of a thumb and moving to your next app. And that is the beauty, I think, of the PSD and DMI regime, which allow you to focus on specializations and become optimum at that. In terms of the attitude of regulators, really and truly, all regulators should be adopting more or less the same rule book. But it boils down to an attitude. So we know that, for example, BaFin isn't very happy to regulate electronic money institutions, whereas on the other hand, you have the FCA in the UK that is all the time advocating open banking, more competition towards existing banks, and it's effectively telling the incumbents, sort of, get your house in order. If not, these tiny guys will soon become much larger than you have.
This from Stefan's comment, who was discussing with us this matter actually in the internal email, right? So, Tim, what's your take on this?
Getting an opportunity to talk to many regulators throughout the world with many clients I've had over the years, they're moving, but they are slow. And I think this industry moves at a pace that they can't possibly keep up with. And so they are moving, they're open to change. But then this market, I mean, we've seen a lot of people get hurt in this year alone. So they're protecting, I think, even more retail consumers in the back end, and where they've seen these stories. So they are open. I think they are changing, but this is just a process.
I have one last question, but I would like to address this to all of you. So, how will blockchain So blockchain wasn't created and Bitcoin wasn't created to be of any benefit to financial institutions. But how can blockchain benefit financial institutions? How can it benefit the users of financial institutions? And how it can benefit regulators?
So, in my humble opinion, this would go down to making transactions much faster and much cheaper. Blockchain can absolutely help on these two things. We know that it's crazy. In 2018, it's faster to get on a plane from London, travel all the way to New York to send money in a pile of cash, rather than just sending it through the bank. Blockchain can help with that and actually make it much, much cheaper, because there are so many fees around sending money, and yeah.
I think definitely making it frictionless is one of the biggest benefits, but I think when it comes down to consumers, what I would envision seeing long term is reducing the cost of services. The amount of effort that goes into sort of operational elements of running a bank or being a bank, and all the inefficiencies that come with the archaic technology and the infrastructure eventually gets passed on to the consumers. Either that's because there's no more interest rates being given out by the banks, or because the cost of services is so high. So by bringing in technology like blockchain that works the way it does, eventually the consumer should benefit with more choices that are cheaper, faster.
I actually contradict Dimitri. I don't believe that blockchain will become the payment mechanism or the payment software for it. But it will be the catalyst for a shift from the system of T plus 2 days, and it will become T plus seconds. And even the European Union has started a pilot project with, I believe, 9 EU member states, which is called Target Instant Payment Systems, TIPS, which nowadays is actually moving towards transfers within seconds, and it doesn't utilize blockchain. But even if it has just been the catalyst for all of this, I think that's already a massive, massive achievement which should be applauded.
Yeah, I think I kind of agree with the last comment. I think blockchain is looked at, everyone looks at how it's going to improve the financial sector, but I don't think it necessarily has to be a blockchain. It's just a better transfer system. I personally don't think without the utilization of a token, it can truly be a blockchain. So I don't think, in my sense of the word, I don't think a blockchain will ever truly be integrated into the financial systems.
Germano?
I think that the blockchain is the key source of for the future. For the future, yes, for the market innovation in banking, because it's possible to create immutable transaction, and it's possible that all persons that participate in the network can see everything. It's very clear. It's very easy.
Okay, I need a roaming mic for Stefan, who would like to make a comment.
Well, Well, I don't want to make it too long, as you have some time pressure here. Well, while we are enjoying ourselves here, feeling fancy, hip, being on a blockchain conference, for example, one of our main banking partners, UniCredit, has just launched its blockchain-based trade finance solution. Yeah, so for all the letter of credit or standby letter of credit businesses financing export businesses, or the big cases, use cases. And even last year, so a year ago on Money 2020 Las Vegas, Open Bank, subsidiary of Santander, launched their online, completely new developed online bank. So banks are catching up. They're sometimes leading the process, but they're looking into the big money. So where we not earn 10 million, 100 million, whatever, but where are the billion businesses? So we should not underestimate them, yeah, but they will look with a completely different approach into that. So therefore, be careful.
Any time for one last question from the audience? Okay, so thank you very much.
Question over there.
There is a question. We need to be fast.
Thank you. Yes, it's a good opportunity because you're talking about banking. I don't know if you know, but for example, in Poland, you can transfer money from bank to bank within 5 minutes. So there's no blockchain involved. It happens almost instantly. You mentioned a bank that recently opened in US that is only online. So again, in Poland, like I can't even remember when there was a bank that opened only online without any physical presence. So you can see that there is a lot of things that blockchain cannot provide these days. Like, for example, how would you, in terms of cryptocurrency, how can you fund, for example, a building of a house? Can banking based on cryptocurrency provide such services these days?
Unfortunately, we don't have time to answer the question because we need to conclude. But I believe hold is actually hold of Priyanka is actually the solution for that. I suggest you research their project, and it's basically a peer-to-peer lending system with cryptocurrency being used as collateral. So I'll let you,
Come
Priyanka,
find me.
discuss. Thank you very much. Great
Thank
panel,
you.
and I'll see you later. Thank you.
Thank you.
How blockchain technology will disrupt the consumer experience. Justin Sun, Tron.
Hello? Hey guys. Hi. Hey everyone. Thanks for having us here, and welcome to Blockchain Island. And my name is not Justin Sun, but my name is Roy. I work for Justin. I'm head of a business for Tron. Justin has an urgent matter to attend to. Really apologize he cannot attend. But again, I'm here, and may I ask, how many of you are aware of Tron? Cool, thank you. How many of you are holding Tron? Thank you, thank you. Cool, thank you guys. So today, I'd like to start with some numbers, right? Numbers don't lie, right? On the right-hand side, you can see like there are 500K, 550K. What is that? This is a number I grabbed yesterday, November the 1st. So 500K versus 457,000. That's our accounts on Tron's mainnet versus that amount of accounts on EOS. And we've been leading EOS in terms of accounts on the mainnet for over 55 days. All right? Oh, next number. Anybody want to guess? What's the number for 700,000? What is that? Any guess? Nope? All right. That's our daily transaction on Tron's mainnet. 700,000 versus 587,000 on EOS. And we'll be leading their way for over 10 days. That's Tron. We are so grateful to be the fastest growing project on blockchain. You know, since the summer, our acquisition of BitTorrent, we launched our mainnet, we launched our virtual machine. You can see we've been keeping grinding, heads down, product team, heads down, hardworking to work everything out. And we achieved all these numbers by briefly over just 100 days. And now, for Tron's team, we have both offices in Beijing, office in San Francisco, with over 300 people. And very soon, we're planning to open an office in Malta as well. So for us, I mean, we're big into blockchain. And we're so blessed to be in the position we are. And we like to devote our whatever we do to take blockchain to mainstream. But the way we see it, blockchain as an ecosystem itself is still not as big in terms of overall like internet of space. And Tron, and as we do, as a public chain, we devote ourselves in terms of consumer internet. And that's our focus. And we believe public chain can do miscellaneous things, but given our experience, given our resources, we like to focus and dedicate to do one vertical and make sure we master and dominate that and make the best thing out of it instead of do everything. So for consumer internet, we try to focus on gaming, entertainment, and the social. By working on these, we try to bridge between blockchain, the technology, to the actual use cases from the consumer internet. And we made our first step earlier in the summer by acquiring BitTorrent. Again, numbers again, right? Tron is always about numbers. So 1 billion and 30%. So BitTorrent as the protocol, anybody's familiar with that, right? BitTorrent, right? BitTorrent protocol has been used by over 1 billion people across the world in a certain period of time. It takes over 30% of the traffic of overall internet. And we are so lucky to get a chance to work with incredible talents within BitTorrent team to maintain that protocol. On top of that, we also acquired the tools for BitTorrent downloads, including uTorrent as well as BitTorrent itself, which contributes over 25 million daily active users, as well as 100 million monthly active users. You know, just to give you an example, we're talking all the apps, everybody we're talking about today, we're talking about 2 digits or 3 digits daily active users, and BitTorrent alone has over 25 million daily active users. And what do we do? As everybody may have heard of it, we are going to tokenize that. We're going to make our project called Project Alice to tokenize BitTorrent. And this Tron's commitment to decentralized internet being the first step to make sure we can contribute to the decentralized everything. All right? And you know, to wrap it up real quickly, as it's running really late, so we are at the stage of Web 3.0. How do we define that? You know, Web 1.0, as everybody know it, we're about information. We're listing everybody.com, putting things on the yellow page, whatnot. 2.0, Facebook interactivity. But we are at the right stage at the very beginning of Web 3.0, where Tron, is trying to be there, be the leader to help people, to facilitate everybody to put the value for people to exchange between different services and apps of the internet. All right? Thank you, everyone. This is Roy from Tron. Thank you.
ICOs and AML regulations. How can ICOs protect themselves and remain compliant with all anti-money laundering regulations? Jan Samut, ICO Launch Malta. Grant Blaisdell, CMO Coin Firm. John Caldwell, BDE Casino Coin. Loretta Joseph, Paradigm Global. Moderated by Kelly Fennick, WH Partners.
Everybody, thank you very much for coming. Today we're looking at ICOs and AML, and we've got a very exciting panel to discuss the topic. To date, the cryptocurrency market is at an inflection point, as it's mainly driven by early investors and private investors, and we're not at the stage where it's truly open to more regulated financial entities. One of the main reasons for this is because KYC and AML have proven to be a real challenge for cryptocurrencies and ICOs. Grant, I'd like to come to you and ask, how are ICOs solving these channels so they can play a more value-added role to the ecosystem?
Well, I like getting kind of out of theory and going into straight practice. Okay. So especially at conferences, I think that's needed a bit more. So we've serviced about over 70 ICOs in the past 9 months when it comes to AML. Unfortunately, there's quite a bit of miseducation, both by some service providers who are actually KYC providers, but they structure it as KYC AML. The ICO end, most of them are not, let's say, educated enough to differentiate these differences and understand the nuances. So part of it's the education aspect. Most importantly, I'll give a straight use case of a pretty big ICO we serviced, British one. They raised $20-something million. I know the guys personally. I was talking to them before, and while they were doing it around AML, they're like, well, listen, the regulator's not forcing us to do it right now. I said, okay, buddy, I'll see you in a bit. About 2 months after they finish their ICO, they come back to us and they say, hey, so we'd like to do those AML checks and reports on our contributor wallet addresses to protect ourselves from the regulator from coming back to us, and can you help us get a bank account? So what's happening in this space, for the most part, is a lot of these companies don't understand that if they don't do the proper source of wealth risk analysis as far as the funds that are coming in, not just the identity of the person, but the funds coming in, that then they're severely limiting and risking the future of their business as a whole.
You mentioned something very interesting in regards to the risk assessments. As per the fourth anti-money laundering directive, it's now mandatory to carry out risk assessments. There are certain pillars such as customer, jurisdictional, product, service, interface risk. I know CoinFirm, you've examined many different types of risk indicators.
200 of them.
200. I would like, don't go into all of them because we definitely don't have the time, but if you could let us know about how you go about assessing these customer risks in the customer onboarding process, what you would look out for.
Well, two things to that, and I want everybody here from the traditional system who's kind of on the wall about this, who's talking about AML, and they think it's a big money laundering operation in crypto. The truth is if you understand this technology, how to analyze it and how to assess it, and how we deal with regulators, we say, listen, we understand your worries. Here's a solution for that, but most importantly, this is a solution that exceeds any capabilities or abilities of the traditional system to be able to address that factor. So that's a very important thing to kind of relay. What was the second part of your question? I'm sorry.
The risks, exactly what you would look out for when you're assessing a pillar of risk, maybe jurisdictional, customer, any indicators, red flags.
Well, when it comes to the AML aspect, how we've approached is build pretty much as high of a global standard as possible. And then that covers about 90-something% of the jurisdictions around the world, excluding a few that you don't want to mess with anyways. When it comes to the risk indicators itself, crypto is a very unique kind of environment. You have things that are happening in it that never existed in the traditional space. They don't know how to assess it. So mixers is one. Transaction being found on the deep web on a drug market. These are things that some analytics companies can pull out, but what do they put it under as far as an AML framework for the client?
Building on that, Loretta, you also have 25 years experience in financial markets and have worked with major investment banks. And this is what I want to ask you, because for the banking system, source of funds and source of wealth is crucial. And I would like you to elaborate about how you would go about determining source of funds and source of wealth for a customer to the audience.
I don't think being a banker for that many years is good. But the source of funds is like when you bank accounts, you need to be able to work out where this money comes from, because isn't that what anti-money laundering, AML, KYC does? It's stopping the things that we're, terrorism financing, child pornography, terrible things that happen. So the source of funds to stop these things is why there's KYC, AML procedures globally from regulators and from bodies that build that. So crypto and ICOs are just a new asset class. It didn't exist 10 years ago. So we have to have parameters that we haven't had, and I think I agree with you on that. We need new parameters to assess risks, but to understand, as an asset class, how this fits into the frameworks we already have.
Okay, fine. Jan, you operate a platform which carries out ICOs for issuers and also STOs. However, you also offer the full package, being not just KYC, but AML. Correct. There's a distinction between AML and KYC. And I think sometimes the audience need to understand that, especially ICO issuers.
So basically the way we've done it from a technical point of view is understand that what we are selling is a code stack. So what we've done is we do understand the difference between KYC and AML, and we've outsourced both the risk and the obligation to UK licensed identity verification and AML providers. And basically we're on a two-step process, the first step being identity verification, and the second step being then running that past our AML provider. So it runs past sanction lists, PEP checks, and all the like dozens of lists there are in the world. From a general point of view, we see two general flavors of contribution or investment or whatever you want to call it in an ICO. The first is the retail investor, which tends to be that kind of 2 ETH to 5 ETH. So at today's prices, we're talking $400 to $1,000. And then you've got the larger investors, which are coming from funds, high net worth individuals, etc. What we do is we work with the client's legal team to set thresholds, at which point do we need that enhanced due diligence.
Exactly.
Obviously, a fund does not have a passport it can upload to a KYC platform. So you have to have a mechanism whereby the fund can be validated manually, following a manual verification for their source of funds and getting them whitelisted into the smart contract. So from a technical point of view, it's not very complicated. You just need to follow, the steps.
I'd also like your opinion on how you would reconcile old world AML KYC requirements with STOs and their peer-to-peer nature.
Well, STOs tend to be a bit of a different animal in that generally our STO clients tend to go for PIFs, which are professional investment funds. And the minimum ticket size for this is 100 grand. So anyone that qualifies as a professional investor and is going to, throw in 100 grand at a time is cognizant of the fact that they need to undergo a certain amount of checks, and these tend to be more or less manual sales. Nobody just enters into an STO. No one participates into an STO just because they stumbled upon the website and they think it's nice and they like the particle effect on the landing page. There tends to be a certain amount of client meeting the investor face-to-face, and then it's very much an offline sale concluded online, which is why, again, on our platform, we integrated a bank wire transfer, because a lot of these funds, they like the project. They are interested in, for example, a fractional ownership of office space, for example. They like the fact that they can enter into an illiquid market, like, say, fine wine, art, classic cars, specialist real estate, and then be able to liquidate on a peer-to-peer basis. But it's still going to be, to a certain extent, an old world transaction where you are meeting me, proposing the investment, and then we just execute over the blockchain.
When you have clients and they want to, they're still determining whether they want to carry out, you could say, an ICO or else an offer to the public, whereby they would require a security token offering. There's obviously a distinction, and this is why the whole regime was created, to provide clarity between virtual financial assets and regular financial instruments as defined in MiFID. Do you advise your clients on what would be the distinguishing factors between virtual financial assets and financial instruments?
We do generally. I mean, I'm not a lawyer. We have an in-house lawyer and we have partner legal firms that we work with for that.
Well, okay. Does anyone else know the distinction between virtual financial assets and financial instruments?
Well, these things are a new asset class. You have to look at as and I think this has been the problem that I have, and I've written regulation and I've advised guidelines now in a few countries. So if you look in Bermuda, it's and other places, are we talking about cryptocurrencies? Are we talking about virtual currencies? Are we talking about crypto assets? I think we're talking about digital assets. So that covers a lot of things. It's not cryptocurrencies. It's like, we have to take view of an entire new world. And I think having a uniformed global approach where we talk about things like digital assets, not cryptocurrencies, is very important. Because then we can have standards that I think is important that the industry apply, but we can have regulations that manage what a digital asset is.
I agree. I don't think we should interpret what the token is based on the technology behind it, but more based on the rights attached to it. And a lot of people are coming here because they want to start ICOs in a regulated market, but they need to understand that there is a major difference between financial instruments and what we have defined it as virtual financial assets. One of the main things being the rights attached to it. Does it have a right to entry in the as a shareholder in the company? Does it give a coupon payment? These are all things which are very similar to financial instruments.
So this is the interesting thing. So you talk about a utility token or a security token, or maybe there's something now that's a hybrid. You know, we can't just think of things with financial assets going forward in this pure form because, I mean, I look at things like utility tokens, you know, Bitcoin or Ethereum, what may have their characteristics of securities may not necessarily be security. So we need to have laws and regulations now that include new definitions that cover these things like KYC, AML in the regulations.
Which is what our regime has done. The PML FTRs are set to be revised, and they're going to include VFA issuers, VFA service providers, and so have our implementing procedures been revised to provide guidance notes to these service providers and issuers as to how to implement proper KYC and AML processes. More so than that, because I really want the audience to take this away, is that a VFA asset must have that utility function. And when I say utility function, it must have a payment function. It is the distinguishing feature between financial instrument and virtual financial asset, that and the rights attached to it, and the fact that it's exchangeable on crypto exchanges.
Also, if you just try to make money, you know, if you just haven't invested, if you're trying to do an ICO and you just want to make money out of the fact you want your token to go up, then I think everyone understands that's a security, and you should be licensed in the appropriate manner. Exactly. So I think this is really important. It's like, you know, as an ICO, you need to understand it's like, you know, if it's going to be taken seriously as a new asset class, and we want, you know, institutional investors to come in, we need to have licensing of this phenomena.
I agree.
Just to give a quick practical perspective on this, generally, because you asked how do you guide a client, you know, whether their token is a security or a utility. What we see is when a client comes and they're interested in running an STO, they come cognizant of the fact that they want to run an STO. They come to us and they tell us, listen, we want to fractionalize this art collection. We want to create a bond on the blockchain. We want to create an asset-backed token backed by gold with a stable coin linked to the price of gold. So they come prepared, knowing that they're going to run.
But then the audience also need to know this, that wouldn't fall under the VFA regime. And that is what I want them to take away. It's not simply if you're using the technology, DLT, that's not going to make you fall under our VFA regime. It is going to be the rights attached to that digital asset, which will decide whether you are within our crypto regime or within regular financial services law such as MiFID.
So I have a question of that, and maybe John could come in on this as it might fit into his ecosystem. I don't remember whether it was called Amazon Cash or what it was called, but Amazon at a certain point had their own, let's say, token within their system. And under your framework of digital assets, how would Amazon Cash not fall under how a utility token would be treated in that sense?
I think you need to have a look at the rights of what's attached. Are you talking about money? Is there an investment function? Is that token only been, not to use...
Utility, pure utility token.
So what's a utility token?
The Amazon Cash would have been purely a utility because it only had a use within the ecosystem. You couldn't take it out of Amazon and use it anywhere else. You couldn't trade it on an exchange, and it was not fungible for anything else.
I'm not setting the regulations. I personally disagree with that. I don't think to be a utility you have to be exchangeable on a foreign exchange.
I agree on that because from a technical point of view...
It's not the sole requirement.
Correct.
You could be a virtual token, but to be a virtual financial asset, there has to be that, it's a sine qua non, there has to be that exchangeability factor.
Can have utility, but that doesn't necessarily preclude it from being utility token, right? So it can have, Amazon Cash has a utility, we all agree, correct? There is a mechanic where you can then get value out of that and put value into that. I think your question, I think it's valid, is how is this not, doesn't this be considered? And I think two things with that specific issue. Number one, timing, and number two, Amazon.
Actually, John, I'd like to jump to you on this as well, because you also, you're part of the Casino Coin Foundation, and you've built a coin built on blockchain's Revolution technology. And you mainly serve as gaming platforms. So you simplify the onboarding process and carry out the KYC AML procedures. Can you elaborate about how you utilize blockchain technology to carry that out?
I mean, just how we've approached it from day one, right? We went to the regulators and we asked them what they wanted. And so we've built this in. I think my favorite thing I heard from the scrum we had over here was Grant said, the market is going to dictate the conditions, and the market is going to dictate the regulations, I think, to an extent more than existing regulations, because existing regulations simply aren't made to handle this technology. And so I was very pleased to hear that. But that's kind of what we did. We went in and we said, look, what do you guys want? So we have things, goofy little features. I know.
I'm gonna have to stop you because they're giving me the signs. It's been very interesting. But we're about to get kicked off the stage. We can continue this elsewhere.
Yeah. Thanks, guys.
Whoever wants
Cheers.
to. Thank you very much.
Taxing Tokens and ICOs. Geraldine Schembri, EMCS. Matthew Zampa, Zampa de Batista. Steve Gingell, PwC. Wayne Pisani, Grant Thornton. Moderated by Ramona Atsapadi, WH Partners.
Good afternoon, everyone. Today's panel will be discussing taxation and cryptocurrencies and ICOs. We're very lucky that yesterday, the Inland Revenue Department in Malta published the much-awaited guidelines on how to tax ICOs and cryptocurrencies. The guidelines were in the form of a guidelines, not an ad hoc legislation, because obviously if we legislate in the form of a law, since the technology is changing continuously in the form of a guidelines, it's better to keep up with the new technology all the time. The guidelines are split into three forms. There's a guideline on income tax, a guideline on VAT, and a guideline on duty on documents. They are very detailed, and they give us some clarity from a Maltese point of view how ICOs are taxed now in Malta. ICOs, but also exchanges, digital wallets, and also income with respect to mining. So my first question is to Geraldine, and it is in respect to income tax in Malta, so income tax and ICOs.
Okay.
The guidelines themselves, they distinguish between ICOs for utility tokens, security tokens, and also coins. Can you give us a bit your take on this?
Okay. They introduce them into coins and tokens. They describe financial tokens, which are security tokens, and they go into detail a bit more. It's akin to the financial instrument test. And they also talk about utility tokens, which are not the same as defined in the Virtual Financial Asset Act. There are two paragraphs which address the initial offering or token generation for financial tokens. And there it comes out clearly that there is no tax consequence. They basically describe that there is no income at that stage, so it doesn't trigger a tax consequence, and there is no transfer for capital gains purposes. However, when we come to the utility token, I think a bit of clarity needs to be explained. They explain a utility token as something that can eventually be used for the purchase of goods or to acquire benefits or else to provide a service. And it explains that gains or profits realized when purchasing these goods, the services, or whatever, are recognized as income. I think it's a bit important to go a bit into the accounting. For tax purposes, revenue is linked to the accounting, and under IFRS 15, it's called recognition of contracts with customers. It does touch a bit on how to account when you do not execute the service immediately. So basically what you do is, if you've raised, for example, 10 million, you don't immediately recognize that 10 million as income. You recognize it as a future performance obligation, and then you recognize your income when you are practically cashing the tokens. And therefore, even for tax purposes, that's when you trigger a tax consequence.
What we're saying is that from a security token point of view, the income collected is considered as capital, therefore there's no tax on
consequence.
that.
But for utility tokens, it's different. You record it, but there's no tax consequence when you eventually collect the money from the ICO, but you trigger tax events as the tokens are being utilized.
Obviously, ICOs who are set up in Malta and are issuing utility tokens, at the end of the day, they'll benefit also from the corporate tax regime here in Malta.
Exactly. So I was going to explain that you apply all the normal rules in terms of deductions, in terms of taxation. You need to be careful that tax is paid at 35%. You get a refund when there is a distribution of profits to the shareholders. So obviously there needs to be appropriate planning not to trigger tax leakages and that you need to have appropriate reserves to distribute.
Thank you, Geraldine. A related question. Some of our clients have asked us over these past months, what if I start a project with an ICO, but then for decentralization purposes, I transfer my project, the platform, the software that I've created, to another entity, to another company, to a foundation, a purpose foundation, which is very common in this sphere. What are the tax implications there? And Steve, what's your take on this? So what are the tax implications and what do our clients need to think about when they're thinking about transferring the whole project?
Okay, I think it's very important, especially like other spheres, so it's not specifically related to this particular industry, that you plan ahead before you carry out the transactions. And I think many times what we find is that the client comes with a fait accompli, and really it triggers certain tax results which were unintended, and unintended for the taxpayer, and in certain cases unintended by the law itself. Again, here the legislation, one has to apply the existing principles of the legislation. So there isn't any specific rule, any special rule that would apply to this particular set of circumstances. If you are in a situation where you have the issuer of the token who is essentially passing on the platform to a third party, and in that transfer he is releasing himself from the obligation, say, to perform in terms of that contract. For example, in the case where you have a utility token being issued and therefore you have a service obligation at some point in the future, and you are releasing yourself from that, then potentially there, yes, there could be tax implications that could arise. There could be a tax charge that arises. There has to be a bit of a discussion around what the particular context in which the transfer is taking place and to whom also that transfer is being made. So if you are transferring out to, say, a company within the group, then it might give rise to a particular tax scenario. But if you are using, say, a special purpose foundation, and a special purpose foundation that will not have, say, a beneficial owner, I would say there isn't necessarily the case that you have a group relationship there between the issue on the one hand that has beneficial owners and the foundation itself, which might not have any effective beneficial owners. So there could be tax implications there with a possible tax liability. So it goes back to the point even that Geraldine mentioned earlier, which is really ensuring that appropriate care is applied in the manner in which this is structured. And the earlier that one speaks about it, usually the more options that one has available to him or her in order to structure the arrangement in such a way that will give rise to a proper tax result.
Correct. The guidelines also speak about VAT, and VAT sometimes, people when they come to us for tax structuring, they speak about income tax, but they forget all about VAT. In this case, on ICOs and on all projects in relation to blockchain, VAT is a very, very important element. And my question to Wayne, the guidelines distinguish again between utility tokens and security tokens when it comes to the issuance of VAT. What's your take on this?
Okay. Obviously, it's not thought of because it's a European phenomenon to a certain extent. So that's partly one of the reasons. But always, you have to look at the token and how it's going to be used. So when looking at a financial token, a financial instrument token, that's typically out of scope of VAT, but you have to look at exactly what rights are being attached to it. When you're looking at a utility type token, you have to see at what rights, what goods or services are actually attached to that kind of token. And when it's a hybrid type of token, whether it's a payment instrument and attaching some other rights, you'll have to break it down. So typically from a VAT perspective, you'd be looking at utility type and hybrid type, which entitle the holder to goods and services. Now, the aspect which needs to be seen is you have to identify whether we're dealing with a transaction upon issuance, a change of hands, or else upon redemption. Now, what that entails is that upon issuance, when you're in an ICO environment, when funds are being raised, the funds which are being raised are typically going to be deemed inclusive of any VAT, irrespective of the rate which would be applicable based on the place of supply rules which would apply, and that would vary depending on whether the rights attached to that utility token are a good or a service. Now, when dealing with services, especially electronically supplied services, in terms of the European VAT directive, one would need to look at as to whether there is certainty as to whether that service is going to be supplied. And the reason why this is important is because there's then the vouchers directive, because typically a utility token will be categorized even in terms of the guidelines as vouchers. And if it's a single purpose voucher, which means a voucher where the consumption is clear and the VAT rate is clear as to where it's going to happen, then VAT is to be accounted for upon issuance of the token. But if the token can change hands and therefore the user, the redemption is not clear, then the VAT point, the accountability for it in terms of reporting to tax authorities is delayed until redemption. The crucial point there is to always bear in mind that the capital raise is always inclusive of VAT. So that is something which needs to be accounted for in the workings. And something else which is has been clarified in the guidelines is the valuation, given that there might be volatility when you're going in with a crypto valuation. The recommendation is that 3 values from reputable exchanges are taken on a daily average, and those are used, an average of those 3 would be taken as the base rate to be used for conversion purposes.
And another thing related, Wayne, so if we're looking at a multi-purpose voucher in the context of an ICO, and then VAT is charged at the point when the token is redeemed, most of the time, seeing that we'll be looking at electronically supplied services, we would need to see the VAT at the point where the customer is located.
Yeah.
So I think this is a very important point for our clients to keep in mind. They would need to confirm the VAT rate at the point of consumption.
Ram, there's also a related point, and something we've seen from our experience, is the complexity that goes into building a platform that has that complexity inbuilt into it. So sort of determining where the customer is established, determining whether you have an electronically supplied service or not. And that many times we find from our clients that functionality within the platform is something that is not really thought about by the developers.
Okay, so you have to think ahead. Okay. My last question to Matthew in respect to exchanges. The guidelines distinguish between peer-to-peer exchanges and exchanges where they are holding on their own account. There seems to be a different VAT treatment. What's your take on this?
So, for VAT purposes, a transaction will fall within the scope of VAT only to the extent that it is a supply of a service and the consideration is received in return for the services rendered. To the extent there is consideration and that there is a supply of service, then the conditions are met. Now, we have to look at the nature, what is happening. Starting off with the listing of a, a token on an exchange. So, is the exchange charging a fee in return for listing the token on the exchange? If yes, what type of fee is the exchange charging? Is the exchange charging a listing fee? So let's assume the exchange is charging a listing fee. Would a listing fee fall within the scope of an exemption as prescribed in Article 135 of the directive? I wouldn't think so. Keep in mind that all transactions are taxable unless they fall within the scope of the exemptions in the VAT directive. So when it comes to an exchange, listing on exchange, you have to see exactly what fees are being charged. On the other hand, if an exchange is offering a digital wallet service, for example, and is not charging a fee, then the consideration requirement is not being met. So the transaction would fall outside the scope of VAT. Moving on to an exchange. The first thing that we need to address is how the exchange is operating. What type of exchange? Is it offering a platform, which is offering a sort of facilitating a P2P transaction, a person-to-person transaction, or is it essentially an exchange whereby the company would be buying a coin and selling a coin? So the VAT treatment would have to be determined on the basis of the characteristics of the exchange. In the first instance, for example, if it's offering a platform, okay, via which persons who own coins or tokens can exchange them, then such a transaction, given that there is minimal human intervention, okay, and it's essentially automated, would be classified as a technological service. As a result, the transaction would be deemed to be taxable. Taxable in the country where the customer is established, because it is a B2C transaction and it would be classified as an electronically supplied service. On the other hand, if, for example, you have an exchange which is buying Bitcoin and selling Bitcoin, that is deemed to be a transaction concerning currency, to the extent that the company buying the Bitcoin and onward selling it to individuals or companies is a transaction concerning currency, then the transaction would be classified as exempt without credit. So what we need to keep in mind is not there's one size fits all, an exchange is exempt or an exchange is taxable. We have to look into more detail to understand exactly what the exchange is doing and how the exchange is operating. Keep in mind that in order to analyze a transaction for VAT purposes, we need to understand who is providing the supply and to whom, what is the nature, where is the place of supply, does an exemption apply, and finally, who is liable for the payment of the VAT.
I think the guidelines, they're much clearer on this point of the exchange. For example, we had question marks before, what is exempt or not. So even from an input point of view, whether the clients can be able to recover VAT or otherwise. So the guidelines clarified these points. And you mentioned listing, which is a very important thing. Every exchange, they charge a listing fee. So I think all our exchanges, as a starting point, they would need to get a VAT registration number to charge their clients also VAT.
They're charging a listing fee. Yes, it wouldn't fall within the scope of the exemption. Likewise, if they're charging a membership, an admission fee, there wouldn't be, the transaction would not be exempt. On the other hand, if they're charging an execution fee, then potentially it could be exempt. So it depends exactly what charges are being put forward to the customer.
Exactly 2 minutes. I don't know if there are any questions on tax.
Friday afternoon.
Afternoon. Okay, no questions. Thank you so much for our panel.
Thank you.
Token modeling. Marco Pizzarello, Muse FinTech. Rick Klink, Malta Digital Exchange. Tatiana Kaufmann, Full Cycle Energy. Moderated by John Matonis, Bitcoin Foundation.
All right, welcome to Token Modeling at Malta Blockchain Summit. Congratulations to the organizers of the event. This is a massive crowd, and it's going really well, and it's only the first annual, so it's a little hard to believe that this is only the first annual with this kind of attendance. My name is John Matonis. I'm one of the founders and director at Globotex.com. We've already announced the panel, but we had a late addition with Lisa Azupete from Fintellum, who is going to be joining us on the panel as well. I want to start off with the changes that we've seen in the last only 12 or 15 months, I think, before we get into the panelists. The regulators and the government in 2017 were hit with a massive wake-up call around the world. Previous to the birth of the whole ICO market, there were only two ways that companies had to raise funds. They could either sell equity or they could sell debt. Those were the two traditional ways of raising capital that were available to entrepreneurs. Then we had the birth of the ERC20 token, which is based on Ethereum. We actually had some other tokens prior to that, with Mastercoin being probably the first, even before Ethereum. So those were all, in essence, token issuances. But it really didn't burst out until 2017. And the regulators don't know what to do with this. They know how to handle equity and they know how to handle debt. But when they see an ICO token, it doesn't fit into any of the existing boxes. So they're a little befuddled by it. My one tip, though, to the banks and the regulators in Malta is, if you want to surpass the other jurisdictions like Gibraltar or UK or Luxembourg, Isle of Man, it's really easy. The only thing that you have to do is the banks have to make a market, a two-way market, in digital currency. Don't bank the companies that are providing this service. Just make a market in the foreign exchange market the way you would for euro and yen and pounds and dollar. And you will really be a blockchain island. And no other jurisdiction would be able to compete with that. So I want this panel to be about the token modeling from the utility token side, and also let's talk about, make the case for the security token side, because security tokens now are starting to evolve in late 2018, and I'm going to let Rick make the case for security tokens.
Thank you very much. Yeah, and actually, I also want to say it's amazing how many people are here this time of the day. We expected there to be nobody here, so thank you very much, everyone, for being here. Give yourself a clap, right? Thank you, John. I think, so we're actually setting up on both sides. We're setting up as Malta Digital Exchange. We're setting up a VFA and we're setting up an MTF. So we'll be able to handle both security token and the traditional ICOs. So our background is all in the traditional stockbroking world. And so what we see is a big move in terms of into the regulated environment. So as we all know, we had the big run up into December and the big drop. And I think what everyone's looking for is regulation. And in terms of what we're seeing in our traditional stockbroking firm, we run a firm in Australia that's running about $50 billion a year in traditional equity modelling. There's great new tech that crypto provides, where we can introduce with smart contracts and everything else to lower that cost of providing those kind of services. So what we're seeing is we'll provide both. We'll provide them both in a regulated framework. But yeah, we're seeing a big push and lots of interest in starting to move down the security token path, calling it a security token, and leveraging the technology, the innovation that the blockchain provides to again lower the cost of providing those services.
So Rick, I can see why. I can see why investors would like the security tokens, because they get a lot of investor rights from that. It's more like a traditional equity. They may receive dividends. They're entitled to a portion of the corporate profits. But what about on the side of the buyer and the investor? How do you envision security tokens having the type of liquidity that we've become used to here?
And it's a very good question. So for example, we signed a new release last week with a company, a gold-backed token in Canada called Tokenomics, which is a company there. What they're doing, they were listing on a traditional exchange in Canada. They're moving, what we've done is an MOU for them to do their new listing over in Malta. And what the advantages we provide is, I totally agree, that currently there's just not enough distribution in the model of security tokens, but our systems plug right into Thomson Reuters, or what's now Refinitiv. So they have 250,000 terminals all over the world. We plug straight into Bloomberg with our fixed gateways. So what we can provide from a security tokens point of view with basically industrial level infrastructure is that there's 250,000 Icon users, or Thomson Reuters Icon, that will see every one of the companies that list. So in this case, Tokenomics, when they come on board, they get that institutional buy-side, sell-side that's not possible in the industry today. So that's how we'll provide that distribution and that wholesale coverage on the institutional part, which is not available today.
Okay, so let me move to Tatiana for a second. And on what advice would you give to companies that are looking at, they're evaluating both models, or where do you come from in terms of the utility token versus security token?
Yeah, so I've worked on both sides, utility and security, and I think in the last couple of months, security token has become almost like a dirty word that's against innovation, which is really a shame because when I started looking at security tokens about a year ago, it was really a way for us to innovate the archaic financial markets, right? It was a way for us to take our trading floors off of MS-DOS and other archaic systems and really create security instruments that were, whether it's equities, bonds, or derivatives that were transparent and weren't prone to fraud and open to a global market and had instant distributions and all kinds of cool tokenomics built into it, right? And then at some point when this wave of regulation hit in the last few months, security token became this blanket term for compliant utility tokens and the asset-backed securities that we looked at. And people feel like regulation is anti-innovation. So I think we're definitely fighting a battle to loosen regulation, particularly in the US, where I do most of my business. But we are heading that way, and I feel like this is a positive movement for the industry.
So can you name some security token issuances, or is it still hypothetical?
It's absolutely not hypothetical. So the first 3 issuances that have hit the market were Blockchain Capital, Spice VC, and Science. They were all tokenized venture capital funds. VC funds are a really interesting case for tokenization because they're traditionally very illiquid. The capital's stuck in there for 7 to 10 years. So if you had a token that was freely tradable that represented the current NAV of the fund, you could actually cash out at year 3 or 4, whenever you actually needed that capital. So that was the interesting case for that. Then the 4th token that hit the market was Lottery.com, which I had the pleasure of working at when I was previously at DNA. And that was a revenue share token. So it was a play on the royalty payments model. And that model specifically is incredibly interesting because as we're having more and more stable coins in the market, you can actually track the revenues of the company and get those dividends instantaneously or distributions, however it's structured. So through a stable coin, you can get daily distributions rather than a check mailed to you every quarter, right? And then the deal that I'm most excited about now that I'm currently working on is called Full Cycle, and we're about to launch a $300 million crypto bond to fund renewable energy plants around the world. And it's an opportunity to have a truly liquid, borderless issuance for people to participate in solving a global problem.
So would those type of tokens, specifically the one with the venture capital, would they have liquidity beyond the jurisdiction of the US? Would they have global liquidity? And would they be able to get down to the retail level?
In theory, yes. So the way the exchanges, the security token exchanges are operating is they go jurisdiction by jurisdiction by jurisdiction. So as long as I'm covering from a regulatory perspective, whether it's US, Singapore, Europe, theoretically my token can move between those jurisdictions. In some places it can be sold to just accrediteds. In some places it can be sold to unaccrediteds. It may have a finite number of holders. So for example, most issuances in the US right now are done under Reg D, which is limited to 2,000 holders. But at some point, these will be the new IPOs. Like this will be the way finance is just done in the next 10 years. It just feels very slow right now. It feels like we're in cave times and we're literally with shovels trying to dig this industry. But in 10 years, NASDAQ, New York Stock Exchange, every European exchange will have blockchain technology. Goldman Sachs is going to wake up in 2 years, start buying up companies that are in this business. This is the future.
Oh, I agree that it will be acquisition-led. Okay, so I'm the moderator. I have to maintain some neutrality here. I know that both Lisa and Marco are coming at this from the side of the utility token. So what would you advise companies who are looking at an issuance today?
I agree, on the same page. So the most important point now is to bring a blockchain technology to the traditional financial industry. So if we can create a new token, new model that are backed by traditional instruments, we can exploit the good thing of the blockchain. So it will be easy to trade 24/7. It will be easy to transfer and trust property, and everything that in these 10 years was developed for the blockchain increased the decentralization of the finance. So traditional finance must work closer with the blockchain technology. For example, we are working on a new token that is backed by ETFs. So ETFs are traded instrument listed on the stock exchanges, but if you have a token that is a sort of stable coin, but instead of a currency as ETFs, you can use a lot of quantitative analysis to organize portfolio and to do a better management of the asset using a combination of listed traditional instrument and new blockchain-based instrument.
So that sounds like it might be a test case in the courts. So stand by for that one. I know that Lisa has also an opinion on utility tokens. Can you elaborate a little bit on what the benefits would be from the utility token side?
Sure. Thank you, John, for the introduction as well. So I couldn't but agree with Tatiana on her perspective that indeed this tokenization and security tokens as such are really bringing in the innovation to the traditional old and a little, too old perhaps financial industry. But at the same time, I'd like to make a case for actually the other side of the not so traditional investor base, which is usually the non-accredited investor base. So what the ICO phenomenon actually has brought to the industry, something completely unprecedented, is more or less orderly, in a way, standardized process for non-accredited investors to participate in growth of something obviously important like startups. So I would rather say here's a wonderful tool for startups, for companies, even for mature companies, to go to market, to develop their communities, to raise awareness about their projects. And I really, truly believe that the innovation and regulation should definitely not kill this aspect. It's one of the most innovative ways for companies to go to market today and probably for the next, 100 years. Because cryptocurrencies, first of all, is something that we have never seen, ever since we dug up gold. It's a complete equivalent to that sort of asset.
No, I mean, I agree that the innovation is on the utility token side. So that's my personal perspective. But we have 4 minutes left. So since we have the 4 expert panelists, I'd like to use this remaining time for, please take 1 minute each. And if you can answer the question for me, for the entire audience, really, is when will we see a return to the ICO market like we saw it in late 2017, early 2018? And if, please just tell me why you think that and when we might see that return. So let's start with you, Lisa.
Well, I certainly hope so, because I currently help the ICOs to do exactly that. So be it ICOs or STOs, doesn't matter. So I certainly hope it will happen. We have all the tools in place, all the technical aspects in place. There's wonderful jurisdictions open up to various types of token raisers, Malta being one of the biggest ones perhaps today. So definitely, I believe it will happen, because the reason why is simply because the market is mature enough.
So 2019?
And there's
Are you
enough
saying
demand.
2019?
2019, perhaps 2019 second half.
Okay, Rick?
Yeah, I think so as well. I think with the regulation of tokens, I think that's what will help a lot. So again, with what Malta's doing here in regulating the ICO market, the VFA. And I think the second part is when all the custody gets fixed, and there's various solutions coming down the line. Once custody is fixed and the institutions can get confidence again in these kind of tokens, that those two things, I think, will go a long way to lifting the ICO market again.
Okay, so far I'm encouraged.
I'm on the same page, but regulation is one of the most important things. So until the regulation is not set, it's difficult to invest because this process requires an investment. So it's very difficult without a stable regulation. But the regulation will come. And from Asia, from here, from other countries, I think that the first 2 months of next year will have a sort of framework.
So you think we'll see a return
yes.
to the way it used to be?
Coming.
Okay.
Yeah, it's coming
Tatiana?
soon.
I hope we never go back to 2017. I think 2017 was one of the most damaging industry to the blockchain industry as a whole. I think the amount of fraud that was perpetrated was insane. I think so many quote-unquote founders raised money and were never to be heard of from again. There was no tools in place to make sure that there was proper custody, that there was any sort of regulation or any sort of investor protection, accredited or not accredited. And I think it gave blockchain a bad name, and it gives people like me an uphill battle, because now I go to traditional investors and I try to educate them about blockchain and what we can do and what this technology can do, and they say, isn't this thing full of scams? That's what 2017 did to our industry. So I hope we never have to go back there.
Okay.
May I interrupt just one more
Briefly.
thing?
Now it's getting interesting.
So there's also the traditional industry of venture capital and IPOs, and apparently venture capitals also fail, dramatically. So whether it's a scam or outright failure, I think the overall failure rate is about the same.
Yeah.
So I wouldn't negate the industry as such just because there are bad players, because in every industry there are bad players.
That's a good point.
And that brings you to actually your own responsibility in taking and doing your due diligence. So I actually see growth in analytics and companies that do the due diligence for the investors instead of segregating the two.
Okay, my opinion is that we will see a return when the current ICOs stop selling their ether. So join me in thanking the panel. Thanks very much.
Post-ICO, what's next? With millions of euros in the bank, how does an ICO switch from raising capital to running a successful company? Benjamin Bilski, Naga Group, Cyrus Faisal, Swissborg, Igor Chmel, BankX. Moderated by Karl Schranz, E&S Group.
Yes, for this event.
Hi, we are now with 3 ICOs who have already completed their ICOs and raised a significant amount of money. I would like you to introduce yourselves and tell us something about yourselves and the projects.
Okay. Yeah, my name is Benjamin Bilski. I'm the founder of Naga. Naga is a stock-listed company at the German Stock Exchange in Frankfurt. We're listed and we ran our ICO in December 2017. And we raised 50 million from 63,000 investors. And we focus on cryptocurrencies, obviously now, on financial trading and gaming. So this is kind of a very short overview.
Great. My name is Cyrus Faisal. I'm the proud founder and CEO of Swissborg. At Swissborg, we're really democratizing wealth management. We were very fortunate to finish our ICO pretty much the same date in December and January of this year. We raised 52 million US dollars out of 149 countries, which was great. Right now, we have a CHSB token that is being used within our network, and our proof is the meritocracy, making sure that everyone who contributes within our network gets rewarded.
My name is Igor Chmel. I'm the founder and CEO of BankX. We made ICO last year in November, December, and sold tokens for 72,000 Ether. Our model is securitization 2.0, so we do origination of security token offering and the platform that are industry specific. The major product is MovieCoin, so it's fundraising for Hollywood movies that I'm working right now.
But what point of your development, at what stage are you now that you post-ICO?
Yeah, so actually, we had a very tight roadmap. As I have to say, our company comes from the old fintech industry. When I was watching crypto, it was very dynamic. So we were always focused on product delivery. So our white paper was super tight. And what we did is, because we were more about financial trading and gaming, we've built up our crypto ecosystem first. So we started off with a coin, obviously, with the ICO. So we launched the ICO, then we gave it a utility. So we made it happen that you can use your Naga coin, our own coin, in our apps to invest into stocks. So you can fund with your Naga coin and buy an Apple share, sell it, and you make profits in Naga coins. Then obviously we were missing a wallet, so that people can store the Naga coins. So we developed a wallet. After the wallet, we have released a card, a contactless MasterCard, and I think we are actually one of the few companies that has a card out that works, so it's fully connected to this ecosystem. And today, I just wanted also to take the opportunity, because it's a very nice crowd and super nice conference. We are releasing our own exchange at this moment, so my team is watching. So nagax.com will be released today. So this closes the whole circle in terms of our ecosystem, so we can have the whole utility in our platforms. So this is where we are at. And a last thing is that we will focus also on more on STOs as a company. We did an IPO, we did an ICO, so we know how to structure. And we will also support with our exchange STOs, because actually we have an own brokerage in Cyprus, which is an underwriter and was an underwriter of our own IPO. So we know how to do it, and this is kind of also something to contribute in the crypto ecosystem.
Cyrus?
Great. Maybe just before digging into what we're doing and essentially what we're offering as solutions, as there's a lot of ICO contenders and a lot of people dreaming about it, I'm just going to walk you through what we've been thinking and applying after our ICO, right? So after an ICO, what happens is that you're fucking super, super tired, okay? This is how it is. You get to a point where you've gotten your campaign, you're doing touring the world to actually get funding, and then you get, thanks to the community, 60,000 or a little bit less, and you get a great amount of money, and that's great. But in order to get that money and preserve that money and make sure that that money is going to transfer from an ICO stage to hopefully one of the best fintech going forward, I think so there's a lot of different stages that any ICO has to dig into it, which is one of the first thing is treasury management. So a lot of people, we've raised a big amount of money, but it was in crypto. And I'm not saying you should shift everything to fiat, but what you have to do is actually actively manage your portfolio, like covering it with hedges. And that's something I think so we're quite proud of doing, because the market has dropped 80%, right? If we kept everything in crypto and we didn't actively trade it, today we will roughly have only 10 million left, which is not the case. We have over 30 today. So that's one thing that people should really look into it. Then number two, and the reason why 80% of ICO fails after, is governance models. EY, KPMG, and all the big four people, they're not here for no reasons, and they're not structuring companies for no reasons. So if you guys don't have a clear guidance how to do these things, or a great company such as yours, you really have to make sure that you're in good hands and you're tax-wise, legal-wise, you're going through the good framework and you're actually applying these rules to make sure you're be able to do your business. Third thing, having a clear business model, making sure that your token is in the center of that business model, making sure that if the owners of that token, of our CHSB, are the one who have access to products, get discounts, get rewards based on that token. So making sure the token economy of your DAO, decentralized automation, is really the paramount. And then obviously is recruiting the best people, recruiting the best talents. That's something that is very fundamental. And working out in a lot of different places. As we all know here on the stage, we're all based in different countries, we're quite decentralized, but we have different activities based on which licenses are pretty much open or not open. And the reason why we're all here today in Malta is that because I think so the Prime Minister and MFSA had taken a very good choice of actually how to make crypto legit. So those are, for me, the four big things that you have to not only develop, but think about it every day when you've finished your ICO.
Yeah, so I would like to announce, so we got the license yesterday for a few days ago for security token, utility token exchange and utility custody here in Malta, and we plan to apply for security token exchange and security custody as well here. So Malta, we found Malta the most friendly jurisdiction for us in terms of getting and serving our clients. And for us, the main thing was to switch from, so we come to the crypto from traditional banking world, and I used to run innovation lab for the biggest bank back in Russia, and worked before that in Citadel hedge fund in Chicago, so many financial institutions. And I came for crypto because to disrupt financial world. And right now I'm applying the same techniques back to financial institutions. So, and I found difficult to prove them that we are not like another crypto company, but they were a real player and we are real the same guys, and they have to talk to us. And they're spending many things. We are working with the ranking agencies. We are founding the auditor. So we're getting many things that is required in order to prove into financial institutions that we are the same animal and they should work with us. So by end of the days, right now we do equity fundraise also because we need institutional money to endorse our custody, and we cannot to make insurance, to get insurance like BitGo from Lloyd's or something similar, or fundraise from Goldman Sachs. So basically we're reaching out to the same financial institutions and come to the same endpoint as these guys who never did the ICO. So it's kind of challenging, but this is like a new way, and it's a very interesting time to be there, very turbulent. I completely agree that cash management is very important for the post-ICO. We're not so good in that as you was. Yeah, but it still should be done. Right now, it's much easier than it used to be 1 year ago, so because right now you already have custodies in place. We have many developing exchange infrastructure. We have some banks that start to be more friendly, opening accounts. So it's doable just to have pay attention on that and find the right providers.
Okay, Igor, yourself. How do you manage to manage your investor expectations while still focusing on your development? I mean, we know in crypto, investors don't expect a 20% return annually, even though that would be a fantastic return in any other market.
First of all, don't treat them as investors. They're not investors. Yeah. So they start from that. So they bought tokens and they bought services that is the tokens used for. Right now, for us, the major case for usage of tokens is the custody. So if somebody wants to use custody for free, not to pay money, they need to keep this like 3% of their assets in tokens. And this is what they bought for. And if they're not happy with the exchange rate and they really bought this because of the investment purposes, then they're free to go and sell this on the exchange. So, and we quite straightforward in that. And when people start to ask us, oh, what's your report, show us. We made in revenue this year $8 million about that. Like we do audit right now, but we are not supposed to explain all that to token buyers. We just treat them well. We explain that what the service, how the tokens can be used. But in terms of the audit questions and governance, it's everything for venture capital and for equity investors. And we still haven't had the equity investors, so we don't have equity financing yet. So we are only in this process. So we just separate and be clear that there's two different animals.
Cyrus, any challenges that you experienced post your ICO? I mean, for example, we were speaking before about human resource management.
Yeah, I think so. There's a lot of, I mean, we're in crypto, so this is probably a synonym in another language for challenges. And there's a lot of challenges on cybersecurity. There's challenges on the legal side, getting the custody banks working with you, getting credibility with governments, and making sure that you're not just a fade. You're actually the future of finance. You're the future of fintech. You're the future of whatever industry you're taking over. And I think so, you go slowly and slowly. No one really, really understand the technology, but you then try to educate people, and that's what we've been doing a lot recently. Is edutainment, we call it. So organize meetups or similar conference like that, making sure that actually I'm a lecturer in different universities around Europe, and making sure that you're actually explaining to people what you're doing. I think so. This is a great thing, and understanding as well what is the purpose of blockchain. And one of the purpose, what we think, besides decentralization, and the freedom, is in a shared economy. People want to have ownership out of our data. And for us, this is really one of the paramount as well. So we'll be releasing very soon in our mobile app, Swissborg app, is that you'll have the possibility to go from, let's say, €1 to invest into crypto. But more importantly, you could go from €1 to buy a basket of cryptos. And you're not buying into a fund. You're actually buying the strategy, and that strategy is buying these different underlyings that's going into your wallet directly. So you're actually holding the keys of your future by holding the data of your future. And this, for us, is one of the very big challenge for us, because how to do that is super complicated. But we're working on it for a year and a half to making sure we have a great order management system, best execution venue, and making sure we have a very secured multi-signature wallet. And that's what we're building, and that's one of our big challenges right now.
And yourself?
Yeah, I mean, we had a large community, right? 63,000 investors, 5 million unique visitors on the webpage in 2.5 weeks. I mean, it was crazy. So what we were actually handling, or our challenge, is mainly to fight against this wrong perception of what a token should, or your investment should do. So impatience is a big thing. So I believe, or we believe at Naga, that only product delivery and building a utility can overcome this impatience in some way, because once you deliver something and it works, then you get the trust back. And this is why we don't even listen to our investors, because they are not investors, they're contributors. We appreciate them very, very much. We involve them into the product building. But yeah, the challenge is basically really to deliver. This is very important, especially if you come from the, let's say, traditional side of equity financing and raising. So we founded the company in 2015, and we went IPO in 2017, which was not reverse IPO, but a proper IPO. So, and audit and corporate governance, and especially how your company is built up, is super, super important in that stage. So you cannot fake and trick. And this kind of faking and tricking in the ICO space, which we saw, we were shocked, right? So we kind of still have the challenge to edutain, like you say, because it's really like this. So we want to make people believe that what we do with our agenda works. And I strongly believe if you deliver, if you build a product, and there's a specific patience, which every investor usually has. VCs, their vision is 5 to 7 years. Here it was like, the token is not X6 or something after 6 months. Like, this is the biggest challenge, I think.
Okay. Igor, future plans for BankX?
Future plans. So to become a crypto Goldman Sachs, basically, to build, we are both two worlds. So we do financial services, we do technological white label solutions, and at the same time we do some financial services for crypto, which require licensing. And those two worlds, they're like in the US we do only white label IT services, like in Europe and Asia we start to do licensing. And these things are developing, and we're in the process of talking to building very interesting partnership with the companies that already built a good job, like in tokenization of different industries, like in art, for instance, it's CDEX, Codex, some others, and we partner them in order to make securitization in the industries. And for us, it's like a gold rush. So we're in competition with the companies like IBM, Consensus, about establishing standards for tokenization of particular industry, and make sure that Our standard is underwritten by actually $100 million of institutional money. And we hope we're about to establish the standard in movie, music, potentially art, real estate, and basically each of these established standards give us in valuation of the company like another $100 million. So it's a very interesting time to be, and I don't know where this will end, but most likely in like some very big IPO in some moment.
Cyrus?
Yeah, I think so. We're on the same path. I think with Naga, BankX, other people, is that we're trying to, to bridge the off-chain banking world with the new on-chain blockchain world and combining those both together, taking best practice from the ancient world and optimizing to get a better future. And I think so. At Swissborg, we're really prawning the fact that we want to create an ecosystem that is, it's really relied on this meritocratic system, which is if you bring something to the table, you get rewarded. You want to make sure that anyone could get accessibility to wealth. You want to make sure that it's not just friends. It's whoever wants to contribute within our system actually gets rewarded. And that's how I see the world, which will be much brighter, it will be much more transparent, and you won't need to rely on middlemen and companionship to go to golf courses with rich people to actually earn what you have trusted and what you've really worked in. So really making something better and more optimized.
For us as well, access is very important. And I want to just make this one statement that we want to have the Naga coin as the Bitcoin for stock trading. So I say Bitcoin, why? Because it was the icebreaker in terms of mass adoption. People understood what it is. So we really want to have this one currency that you can invest with a crypto coin into physical shares via our own platform. So this is kind of our vision, and to make it accessible in any country in the world.
Thank you, Ben. Thank you. I'd like to thank our panelists here, and obviously I wish you the best of luck.
Thank you.
Thank you.
Successful blockchain investments. Jonathan Malveaux, iCash. Dwight Van Diem, Blockchain Communications Worldwide. Sionan Zhu, D Group. Moderated by Leonard Bonello, Ganado Advocates.
Hi everyone. As you can see again, there was a bit of a mix-up in the presentation, but I'm happy to have here these guys because I've been knowing them for quite some time, and it's great to actually meet them here. So I'd like to start with the first question. We're seeing a major shift from public sales to private sales. What is your impression?
Yeah, well, I mean, firstly, thank you everyone for sticking around for the final event. I'm quite impressed to see quite a few people still here. So from my point of view, at our company at BCW, we are sort of a consulting advisory company that sort of helps projects from ideation through to a token generation event, i.e. exchange listing. I look after the investment side of it that sits in the middle. And as part of that, we have always been heavily focused on the private side anyway, and so that's very much on VCs, family funds, institutional investors, and the likes. But what you are seeing is more of a pullback from the public side of it. There is definitely a view within these projects that as we move into a bear market, they're starting to either lower their caps, pull back completely, focus on the tech, build that out, and various different sort of aspects of it. So there is still some appetite on the private side, and I still think that that needs to be on the public side. I mean, when you're doing an ICO, you're basically aggregating angel investing through to Series D to IPO. And so at some point, you need to create that traction and the momentum that you want from the public space if you are going to list it. If you're just planning on doing a a more private side sale without an IPO, then yeah, go get 5, 6 investment funds to do the investment. But when you actually eventually have to list it somewhere, you want to have it in as many hands as possible. So yeah, you can change the mix and you can go, okay, I would have done 20% private and 80% public. Now we're seeing them more say, okay, let's try and get as much in the private space, but we still need to focus on that public bit at the end.
Okay, fair enough. Siobhan?
Okay, so hello everyone. A brief introduction about my fund. We are one of the earliest and largest crypto funds started from China. And we also have our OTC trading and also market making team. Our founder started 2013. He once owns the largest Bitcoin mine in Asia. And then June last year, we started to raise a BTC-based fund. We raised 8,000 BTCs to invest in crypto projects. So regarding the question, yeah, we saw that the major shift from public sale to private sale. I think it happens late last year when more and more VCs started to look into crypto projects and want to participate. And I think because only by purchasing public sale tokens, they cannot get enough allocation as a fund. So for project side, I think they would love to involve in like famous VCs to get more resources in terms of getting more partnerships, users, and also business advices. And also, plus those famous VCs can like give endorsement for good projects. And also in terms of hiring, like good candidates would love to join companies that ways endorsement from top VCs. So which is very good for projects to do private sale with VCs, and also for public, because most of people they don't have like lots of experience in terms of investing. So that will be a very good guidance for them for public to follow some like investment advices from VCs too. So it's like for the whole public and private sale environment, I think it's like win-win for both, for all the participants.
So Shannon, explain to me. So one of the projects that you have is to actually invest in ICOs, right? So I'm seeing that this is becoming more and more widespread to have these companies actually buying tokens, lock, stock, and barrel at private stage. And is that a good investment? To buy tokens directly through private sales from these startups? Isn't it too risky as an investment?
As an investor, good question. So I think it depends on the market. So right now the market is really bearish, and we kind of twist our investment strategy now. So like last year when the market is really bull, and we like see lots of projects that valuation at 200 mil that with only a white paper and like kind of shining team. And I think those situation is not working right now, because we right now only look at projects that with like good team, with something already being built and ready to launch, with good user base, with good like developer community. So we only consider those projects, and also at the right valuation model. So I see projects right now, the valuation is all around, I think, 10 mil to 50 mil US dollar. So I think that's for the primary market investment strategy. And also for our fund, start from like 3-4 months ago this year, we also look at the secondary market because we really see some good projects that undervalued by this, like investors lost their confidence, and the project really doing good, making good progress, and also so we started to invest in some secondary market also, which lower our risk. That answers your question.
Any comments from your end about
on the bear market side? I mean, yeah, I would say that you know, it's been good for the industry to go through what we saw through 2017, 2018. I completely agree that like some of these valuations that you were seeing, where these guys just have a white paper. I mean, sometimes it's not even a real one that's like put together in a good way, and they're selling a dream. They don't have anything tangible there whatsoever, and then they can just go out and raise like crazy sums of money. And then you have like further issues downstream from that, where like a lot of the times they don't have like a CFO in place to do a lot of the treasury management or any of the other components. And then, I mean, from the VC side, you would never give this much amount of money to a company in one hit. You would just see it as wasted capital that's not being deployed correctly. And so you would see it as an overvaluation. You know, it's interesting to see the industry hopefully move back to a hybrid where there are control gates throughout, where a project is meeting certain things, where it's like at an idea stage, it's got 10 million, it's an MVP stage, maybe it goes up to 50, starting to move into a growth strategy, you know, and this kind of matches that angel Series A, Series B. I mean, when it comes back to the bear market side of things, I think it depends on where you're looking at. Like if your investor bases like these crypto funds, what you're seeing is like someone that was sitting on a $100 million fund has now got like 20 million potentially to deploy because the price of Ether and Bitcoin have come down so much. So when they get pitched a project that they may well have put, say, 5 million in before, they're probably only going to put 1 million into it now. So I think there's just an adjustment down on both sides to make sure it pushes through.
Briefly about public sales, I'm pretty sure that we're having the same effect with this bear market. It's affecting public sales. I've noticed the number of public sales that have been postponed and postponed and postponed again, simply because it's not the right time to launch.
Yeah, absolutely. I mean, as I said in the first question, it's like the smart projects are taking that time to step back, build the technology, and then come back to market when they've got a much more robust product offering. You know, obviously they have to have the runway to allow them to have that process, and so that's, you know, probably a potential problem for a lot of projects out there. But the smart ones will look at it, step back from it, and then come back.
We're also seeing a shift from utility tokens to security tokens. In the sense, when I say shift, it's not like there are many security tokens being launched, but people are talking more about security tokens at this stage. And again, security tokens can mean many things, but something that people are really talking about right now and exploring is equity tokens, in the sense that they give you the same rights as an equity holder. So you would end up so the token holder would be the shareholder of the company automatically. Now, there are many difficulties for that to happen. So there are many stumbling blocks, but I'm pretty sure that in 2-3 years it's going to happen. So do you think it's going to be the future of token sales? Equity tokens / security tokens?
Okay. So in my point of view, because right now the regulations on token sale in terms of like crypto exchanges is not very complete and mature. And so as an investor, we would like to see projects that doing this equity equity sale and also like security token sale. So we kind of want to participate in those projects because we are feeling safe. Because right now there are lots of like crazy situations in the market. Like some projects, they just like take the money and then like extend their lockup period to like before we see 6 months, and then they just change it to 2 years. That investors are not being protected by just participating token sale. And also, like exchange-wise, we see some really big and famous exchange. They can do whatever they want, such as if when the price of coins are volatile, they just pause. Like stop users from trading, and in order not to lose money, and also they sometimes roll back if they don't want to lose on option trading for exchanges. So those types of crazy situation is, I think, preventing lots of participants, lots of VCs who want to enter the crypto market, but because the regulation is not mature, so they just pause there and watch. So I think by more like security tokens come out, and also when you mentioned equity tokens, so I think those people who are just like watching, they can like step by step to move into this market and begin to invest.
Yeah, and I mean, I think it makes more sense as well. I mean, if you look at it like what the world we were going through, you were issuing a utility token, which basically means you can raise a lot of money without having to give anything up. I mean, the only thing you're potentially giving up if you've done it right is you're basically pre-selling your accounts payable from your balance sheet and say that like over the next X number of years, I've pre-sold this, I'm going to take it in revenue, I'm going to build it out, I'm going to push the product out. Now, as you move to a security token space, you can share that equity play and you do revenue sharing or whatever model you want to do. But if you were just to do the security play, you're not going to burn a security token to use a platform. So it makes good sense to issue a security token, allow someone to have the upside benefit of their investment, but also to potentially alongside of that issue a utility token for the future use. I'm interested to see the models that come out.
Agreed. Any questions from the floor, please? No questions 1, no questions 2, no questions 3. Okay, so thank you very much. Oh, there is a question. Yeah. Can we have a microphone, please?
Since we're speaking about successful blockchain investments, is it very common to see venture capitals or like investors that also offer mentorship to the projects, like that guide the projects from the beginning to the end? Is it a common thing?
Yeah, absolutely. I mean, it's done in the traditional VC space as well, but there the difference is like they ask for a board seat, they ask for all these other conditions around their investment which help protect it and nurture it through the space.
I mean, they impose them.
Well, yes, you could say that they also impose them, but on this side of it, I mean, some funds would just invest and then just cross their fingers and hope that the project can go and execute on it. For us, we do the investment, but then we also stay with the project and make sure that they can execute all the way through and post it. Because a lot of the problem is they're very focused on the fundraise, but then not the business operation process afterwards. So I think it's absolutely important that
So you think it stops there at the fundraise phase? You mean, I mean the mentorship and the guidance?
Yes. Very much so.
Okay, thank you.
I think for different funds that have different kind of incubation like procedures. For our fund, we more like start from doing investment banking work, like start from fundraising, and then we introduce media resources. We help them to connect with some like developer community, and also we help with talk with exchanges, because we are investors to some exchange major exchanges. So we have good relationship with those exchanges, and we would love to our project, because exchanges, they have a queue of hundreds, thousands of projects that they sometimes cannot talk with each one. So we help them build good relationship with exchanges. And I also know that like a friend found called DDC, that they incubate a project called D-Routes, which starts really early stage, start from finding the correct person for the correct position, so the completion of the team, and also help with white paper, help with advisory. It's more like full procedure incubation, so it's different case by case.
Thank you.
You're welcome.
So thank you very much for being with us, and thank you to our panelists here, and I hope you have a good rest of the conference.
Thanks, guys.
Thank you.